investment meeting. We talk about everything revolving on real estate except for tenants and toilets. We have a whole separate meeting for that, which is going to be happening next Thursday night. Same time, same place. It's the housing providers Zoom meeting. You can talk about tenants and toilets, and they go over all kinds of things in regards to tenants. We kind of sway away from that. It's open forum, anything having to do with money. I don't care if it's wholesaling, flipping, holding, whether it be buying rentals, mortgages, whatever, liens, whatever it is. We try to do the best of our ability to answer your questions. And by the way, everything we say here, don't take as gospel. Always, always, always consult your attorney and or your accountant. This is what I tell people. What works for you may not work for me, and what works for me may not work for you. So always consult them, please. We'll do the best of, best of our ability to answer your questions. Okay. A lot of us actually on this call, I'd like to start out with people. Oh, actually, before I forget here, we do not have a meeting next month. We have the picnic. Yes, we have the picnic. And I don't know if Leon wants to talk about that. I'll let him talk about that real quick before we get started. Is Leon even on?
I'm on.
Perfect.
Yes, sir. So we have the picnic coming up. We just like to request that people go in and that they register and sign in to be at the picnic. You can come and you can bring a guest. And people are probably saying, well, what is the date? What is the date? The date of the picnic is August 19th. And it's from 6 to 9 p.m. And great food, much like in previous years, only each year, of course, is a little bit better. So we'll have the infamous, famous, whichever one you want to pick, ribs for folks. And I decided that this year I was going to, have so many people that say, oh, they taste so good. Do you have them that's not quite as spicy? And I hear this over and over and over again. So believe it or not, I decided I'm gonna knock half of them down a notch, okay? So that people who they have this aversion, that's probably the right word, to spicy food. If you put 2 sprinkles of black pepper on it, they can't eat it anymore. Yes, I'm talking about you, Joe McGuire. It's like, I have this way that I cook steaks that everybody loves. Joe starts scraping the pepper off of it,
Yeah. It's called wanting to keep my taste buds and my stomach intact.
Yes. So see, what happens is up in this area, a lot of folks have a taste that is different than most of this here world, not even the U.S., this here whole world. So, but at any rate, let me get back to the picnic so that I can get on with the show, so to speak. But we're getting things all set up. We have volunteers who are going to be helping. So I got a commitment from everybody except one person, and he's on the call, and I'll talk to him a little bit later. The key thing is, the main reason why we have it because of the fact that people are able to come and they can bring a guest. So all the food is free. The beer and the wine and the soda and all those other drinks, they are all free. And I use it as part of my value proposition. We do a similar sort of thing with the holiday party. And so you go to those 2 events, And, you know, it's pretty simple. The arithmetic will tell you that, hey, it's one of those things where I've gotten all my money back associated with the membership that I paid. So look forward to having everybody there. It's going to be at the White House like it was last year. All the detailed, specific information and all the pieces that I may have not correctly related are on the website, and it's in the newsletter that came out. Hopefully people received the newsletter and was able to look at that. The registration is also there where you can go in and register. So look forward to seeing everyone, and everyone should take the same approach that Mr. Lababera takes, and that is he uses that as an opportunity where he can actually do a deal. So you can do a deal, you can partner with someone who's into real estate investing, and so it's a lot of opportunities, but the main thing is for everyone to, particularly after the pandemic, chat, get a chance to know each other again, and we look forward to having everyone there. Did I miss anything there? Mr. McQuaid?
No, sounds good.
I think
Okay.
you got it all. The only thing I'll add on is you still have time to join and become a member before the picnic, and you can attend for free. If you do not join, you cannot come. You'll miss out on excellent food and companionship and alcoholic beverages and amazing cookies that Dee will bring and all that other good stuff. However, the other thing is, if you did not get the newsletter, two things happened. You don't have an up-to-date email on the website, so please make sure your email is up to date, or you unsubscribed from the newsletter at some point in the past, and I don't have a good fix for that one at this point. The other thing I want to make sure everybody is doing is please, 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 please make sure that whatever information you have on the FFREIA website matches what is in your Home Depot account for various reasons, which we won't get into right now, but it is extremely important that your business information and contact info is exactly the same on the two websites. That's all I got.
You need to mark in that your code is FFREIA.
That too. And they moved where you do that. That's no longer where it used to be. So there is an updated guide.
And I suppose while people are there, you know, we do text people reminders of meetings, but many of the phone numbers are old landline numbers or office numbers, like Andy's, as far as I know. So if you want to receive the text, make sure you put a cell phone number in it.
Okay, I think that covers that part. Back to you, Mr. Joe Lababera.
No problem. Yeah, and another, by the way, what I like also about the picnic for people, especially for your spouses, because a lot of times the spouses don't get on these meetings or aren't able to make the meetings. It's great to bring them there, and actually, instead of them hearing it from you, what's going on, they actually get to see, feel, and touch people and see exactly what's going on. Instead of them hearing about other people, you can actually introduce them, you can actually talk to them. And also, because sometimes, you know, I'm sure, I mean, I've heard it a few times where, you know, a husband or a wife will get involved and they're a little nervous about, oh my God, real estate, you know, could this be, could it do something bad to us financially? And it just gives people more of a comfort, more of an ease. And it really is fantastic when you're able to actually talk to people. So just going there for the networking is fantastic. I mean, it's just, I can't say enough about it. And the food obviously speaks for itself. So basically be there. Okay. I don't know if anyone has anything that they'd like to, actually, if you're looking for something, we'll do haves and wants. Anyone have anything they're looking to buy, anything they're looking to sell? Put it out there now, because I know a bunch of us are looking to buy right now. Who's got something? Anybody? I find it very hard to believe no one has something to sell.
I sold mine, Joe.
Did you?
I did. As is.
That-
As is.
That is fantastic. Everything is as is right now. I love it,
Yeah.
Joe. That's great.
Yeah, the water didn't work. The paint was peeling. Yeah,
So Joe, the properties that we have for sale are gone before your announcement. Okay,
Yeah,
they're gone.
I know. I they are. It's they actually are. I mean, I've had it some places, and they're just, it's just ridiculous. I mean, in a good way. But I was actually going to go over some of that stuff actually tonight. But if anybody, don't be afraid to put out what you're looking for. I know there's some newer people on here. Tell us what you're looking for, because if you don't tell us, I promise you, we're not going to call you.
Hi, guys.
All right.
Good. How you doing, man?
Doing all right.
Great to see everyone. I'm down here in New York City. I actually would have come to Johnny's, but my daughter had surgery last week. But I'm going to definitely try to come to the picnic.
Great.
Like everybody else here, I'm looking for any single or double I can flip, but the easier said than done. What I want to ask about is these notices from RGE about alternative energy providers. Should I do nothing about it? Should I take it seriously? Should I? Yeah.
I don't know too much about it. I've been hearing about it. I don't know if anyone else does.
well, they put, RG&E puts in, every month they put in a little, you can purchase your power from alternative sources.
Yeah.
So, I mean, they've been doing that for years. There are some new sources becoming available, and environmental, wind power, really, and our solar and wind. But I don't know that RG&E is. I have not seen anything from RG&E pushing.
I got a couple of things from them. All right, I'm not going to take it too seriously.
Call
Yeah,
Oh.
call. Yeah, I keep thinking, the one I listened to, I spent a night listening to, because the town was putting it on where I live. And that looked interesting. Susan came up with it. They have one that is even better from the sounds of it. And I just haven't gotten back to do anything with it. But yeah.
Hey, Scott's in.
Ah,
Yeah, I told Scott's coming in.
To address Howard's comment. So yeah, what's happening now? There's a new push for the city of Rochester doing a alternative energy program. Now, it's very important you understand that if you do nothing, you opt out. In other words, you're in unless you opt out. So this is the city of Rochester hooking up with a subsidiary company that provides alternative energy. And if you get a letter, you need to opt out. Otherwise, you're going to automatically go in. Now, I don't know what this means in terms of saving any money or so on. RG&E is not in this picture. They are not in this program. They deliver the services only. You'll get billed from them with what they do. It's the energy that you're paying for. So it's a personal decision whether or not, really comes down to whether or not you believe in new green energy, new alternative energy versus old energy. That's really what it comes down to. So the city of Rochester has a program where I'm not sure when it starts or when it begins, but it's laid out right there, and everything's in the letter too. You get the letter; it'll tell you exactly what to do.
I'll look a little further into it. I only pay RGE on only one of my properties anyway.
okay. Anyone else have anything that they're looking for?
Yeah, Joe, I'm looking for a residential property anywhere in the city that has a backside, what do you want to say? 3-car garage or a shop kind of setup, a little bit of space in the back to operate, a management company kind of thing. So they're out there. They're rare, but they're out there.
Yeah, all right.
All right, Carl, you getting evicted from your current place?
No, I'm evicting him.
Oh, okay. Uh-huh, okay, all right.
Anybody else?
I'm looking for another self-storage facility. Anybody's got anything? I'm looking.
Are there
So,
any left?
acquired one last week, so looking for another one.
What does that put you at now?
7, I think. I have to double check. Sorry I was late. I was busy counting all the commas in Joe's bank account.
Yeah, right.
Yeah.
I figure you're busy counting all your storage facilities.
Yeah. Mhm.
Good.
I'm always looking for, especially commercial, industrial, and obviously singles, just like everybody else. If you know of anything, let me know. Scott, I don't know if you have anything you'd like to join in on. I know you just joined in over here, so.
Let's see. Oh, hey, I looked at, here's one for you. I looked at a self-storage facility in Illinois, Crook County, Illinois.
Cook County?
It's Crook County.
Yeah, Crook. Yeah, okay.
Yeah, you heard me. And we're going through the financials. It does $90,000 a year in revenue. It's a fairly good sized facility. Does $90,000 a year in gross rents. And we're picking up for about 400,000. We're going through the financials and the property taxes are $35,000 a year
What?
on a $400,000 facility. So out of the $90,000 in income, $35,000 a year goes towards property taxes. I couldn't believe it. I had to double check. It's on their tax returns. I got somebody double checking with the assessor's office because yeah, that's probably right. $35,000 a year on a $400,000 property.
It's over 30% of your income for taxes.
It's crazy. Yeah, so we couldn't use a standard 33% in expenses on that storage facility. So we had to change the numbers around a little bit. I got really excited because typically expenses run about 33% of your gross income, roughly, as long as you're occupied. So we always use that as a gauge. But on this one, it's a good thing we looked into that because that would have thrown them way off. So
35,000. Yeah.
$35,000. So that plus the other expenses, probably looking at about 50%. Yeah, 50% of the expenses.
If you bought it at a lower price, could you go in at a super low price? Would it be worth it?
On that property.
What was it? You froze.
It's actually assessed at $325,000. So the taxes are 10%, more than 10% of the assessed value of the property. So.
Next.
Yep. As I said, hey, if it goes half empty, you still have that tax bill. So that was just unreal. So.
Wow.
Mhm.
So, yeah. So does anybody have anything that they want to talk about, by the way?
Well, I got a question for Scott. Scott, you're traveling the country. You've got your expertise down. You're just nailing this. My question is, throughout the country, is what kind of demand is there for storage units? I mean, it's going through the roof. It is. Go ahead.
It is, it's going through the roof. The demand for self-storage, like for people to store their stuff in, there's a pretty big demand. It's amazing how big the demand is. There's markets that are oversaturated. That's the interesting thing of like housing versus self-storage. Housing, they're only going to build so much demand that's there. Self-storage, some towns get overbuilt on self-storage. It's not enough.
Scott's freezing up on us.
Kind of froze there.
You're frozen, Scott.
And demand. So you have to know your competitors. Am I frozen?
Froze.
Okay. All right. I'm gonna turn on a hotspot. So talk amongst yourselves.
We lost you on when you talked about housing.
Okay. Actually,
You're coming in now.
okay. My phone has a hotspot too. We find that, and and like when home builders build a house, they're gonna overbuild. There's only so many houses that are in demand in a city or whatever. With self-storage, some neighborhoods do get overbuilt. In other words, there's way too much self-storage for demand. So that's something that we always have to look at when we're buying facilities. How many competitors are in the neighborhood? Station. Is it an area that has basements and garages, or is it like no base demand in neighborhood? There's no basements, it's higher. Do the houses have attics on them? Not a variable to look at. A lot of HOAs will not let you park boats or RVs or have stuff outside your house. Some housing HOAs are like, so there's a lot of we have to look at. So in that, that's does that answer, Carl? Did I freeze again?
No, you're there.
Okay. Oh, Carl's on the phone. I see.
Oh, it's all right.
Mm-hmm.
So does anybody have anything that they'd like to talk about in regards to anything that they're looking at? Any questions you have about anything regarding any type of real estate, marketing, whichever? Don't be afraid to ask the question.
What do people see? What are you guys seeing in Rochester? We're starting to, in some of the cities I travel in, we're starting to, I don't know if real estate's starting to peak out or just what, but we're kind of starting to see some price pullbacks. Things aren't selling quite as quickly in some of the cities I'm traveling. What do you guys see in Rochester? Has it slowed down at all, or is it still really strong demand?
It's depending where you're at. I know that I was talking to some of the other agents, and instead of getting 10 or 12 offers, they're getting maybe 5 or 6. But some of the places, it's kind of weird. It's kind of like hit or miss. Some of the places are just, going gangbusters. I talked to a realtor today. He had a house on Lux Street, fixer upper. They had 10 offers, sold it for $80,000 on Lux, and it needed work. Just, it's off Portland Avenue. If you don't know, it's over there in that area there. And I'm not the only one that's seen it. I know Colleen, I don't know if Colleen's even on tonight. She was telling me the exact same thing. And I talked to other realtors also. What is everybody else seeing?
Exactly what you just said. Overinflated prices, my opinion, but it's supply and demand. So my speech to my clients is, if you want to sell, if you have any inclination to sell, thoughts to sell, now is the time to do it. And a lot are jumping on board. So I have a lot of clients selling, and these things are flying off the market. at prices that they're shaking their heads at. It's like, really? I never knew. And so, yeah, that's what's going on.
Yeah.
Is-
You're freezing up, Scott.
Okay, all right. I'm on the public Wi-Fi. I'm gonna switch.
Oh.
One quick question I had on that, like a lot of the people who are coming and driving a lot of these overinflated or are you finding it's a lot of out-of-state investors coming in or people from elsewhere who are flooding in, or is it local people who are buying these up?
Great question. And that's my question to my agents all the time. Joe, you take it away.
For me, I mean, I get more local people
Mm-hmm.
than I do out-of-state investors. Owner occupants, obviously local. I mean, you know, I do deal with out of area buyers. They will buy stuff, but I think for me lately, it's been more local for me.
Sure. So it's people who know what they're getting into. The thought was, do you get a lot of people from out of state who are coming and buying in areas for maybe they shouldn't, or they just don't know what's coming yet? And, you know, could those come full circle in another year? But it's local people who they know what they're getting into. They're shelling out for it.
Yeah.
Interesting. Cool.
Well, you know, I was listening to something the other day, and what they said was because of the pandemic and everything that happened, 1 million fewer houses went on the market last year. 1 million. And what they're saying is that eventually, you know, what's going to happen is everything starts to subside again. Between that and then someday when the moratorium ends, God knows when that's going to be, and they start opening up the foreclosures and they start actually foreclosing, and those start coming on the market along with the people who want to sell, along with the people who wanted to sell. There's going to be, you know, there's going to be an abundance of properties out there. So, you know, it's not like all 1 million of the people who didn't sell last year are going to come on the market all at once. At the same time, if the same amount of people are coming online like they usually do, and let's just say even 25% or 30% of the people who didn't sell last year come onto the market, you're going to have 25-30% more properties. So obviously there won't be, you know, it won't be as much competition in regards to, you know, all of a sudden there's only one house on the market. So you have to make sure you have to take everything with a grain of salt, I guess. So one of the things that I've been seeing is that I'm like, okay, you know, if that is the case, which we don't know, you know, for me, and I'm sure a lot of other people, we're all trying to make sure to buy it, you know, at a decent price. I mean, everything that I do is I'm not counting on these crazy prices for down the road, especially 6 months from now. Because when you do a flip, you're out 5-6 months. Okay. I mean, I'm sure I'm not the only one. I mean, who else can add to that? Anyone else doing flips, doing the same thing? Or are all of you just paying overpriced prices? I know you're not. I'll give you an example, actually, and I talked about it earlier, actually, when we were actually before the call started. So I went and looked at a house, and it was a house in the city of Rochester worth about $250,000, and we're getting it for $15,000. And the reason why we're getting it for $15,000 is because obviously it needs a whole lot of work. I mean, this is going to be an 8 to 10 month project. But in this market right now, if the place was fixed up, it would go for about $280. But we know it's an 8 to 10 month project. So we're figuring $240 to $250. We figured $250, no problem. So we backtracked everything, reverse engineered it, not from the $280, but from the $250. Okay. And then by the time we're done, there's going to be, I mean, the people who are buying it, they're going to buy and hold it to rent out because it is a 2-family. At the same time, he knows that if he has to sell it, you know, if the market stays, you know, if it stays at 250 and the market goes down, he'll still make somewhere around 40 grand, give or take, maybe 50. For all that work for him, he'd rather make somewhere around 70. That's what he would rather make, especially when it comes to doing a flip. Originally, you know, I know the guy we were talking to, the owner, I'm pretty sure he was somewhere around $35,000. But when we showed him the numbers and backtracked, he was a very nice guy, very, very nice guy, and very reasonable, and a contractor himself. He was like, yeah, you're right. And he was fine with it. Plus he's getting a huge check from the insurance company. So for this was just pouring gravy all over his giant check that he's getting from the insurance company. Plus he just didn't have to deal with it. Okay. So for me and all the other people I'm doing stuff with, I'm taking that into account. Worst case scenario, let's just say the market stays the same. That's even better, because now instead of it being worth 250, it's actually going to be worth 280 if it stays the same. But I am not going to count on it staying the same. None of the properties that I'm buying, and even the ones that I get, even the ones that I sell, because even the stuff that I wholesale out, you know, some of the wholesalers I talk to aren't, you know, I'm especially some of the newer people, they're not taking that into account, and they're thinking it's going to stay the same. And I talked to a couple of them. I know one guy's had the same property he's been trying to get rid of for going on about 3 months now, and he can't get rid of it. And I told him, because he's got it way, way too high. He's telling people it'll sell for what properties were selling maybe, you know, 60 days ago. Okay. So don't get caught in that. Reverse engineer it. You better be very careful. And then talk to the other agents. And of course, some of the, it also depends on where it is, depending on the streets and depending on, you know, which part of town you're talking about. And by the way, I'm doing the exact same thing on rentals. Okay. I don't want to be the only one talking here, so I don't know if anyone else wants to add on to anything onto this, or let us know what some of you are doing.
Yeah, I'll add something. I've actually been talking to a few realtors myself. I'm pretty inquisitive, and you know, I always ask, you know, is the market, you know, still on fire? And one told me a few days ago, he said yes, but no. What he's starting to see a lot of are homes actually going past their delayed negotiation time. So if a house is listed and the late negotiations are until July 15th noon, they're going past that. So I'm not sure if they're not getting any offers, or they're getting offers, just not $20,000 or $30,000 over what they anticipated. So is that a sign that the market is actually slowing? I think it could be a lot of factors at play with that specific home, but I do think it just shows that the market is mercurial and it's fickle and it's kind of volatile. But I'm just hoping whenever I list mine, it goes for over. But that's one of the reoccurring themes that I'm getting from a few realtors that I've had a conversation with, that is going past. A few homes are going past the delayed negotiation time.
Yeah.
Yeah, Carson, I can echo those comments you just made. As most people know, my wife is a real estate broker. She actually put it was actually a house associated with another FFREIA member. She put it on the market. They did the same approach you outlined, with the negotiation being delayed. And you know, typically you would expect that you're going to come back with several offers all above asking price. And that's the way it was even a couple of months back. And so what happened was they received one offer above the market price, but it was just that one. And you know, so typically when you do the delayed negotiation, you know, Mary Jane's finding has been, you know, you get 7 offers and all of them above price, and you know, it's one of those things where, well, who has the best offer when you say, okay, there's no financing, you know, or either, you know, if you take it in order, if it's all cash, you know, then super, or if it's a situation where the person is going to get a conventional mortgage, all those things. And that hasn't been the situation particularly in the last couple of weeks. So it was above asking price. So I said, not the same as it's been in the past, but all you need is just one person who wants to buy your property and buy beyond the asking price. Then the other thing too is there was not a lot of offers, so it sort of points out the point that you were making.
Yeah, I agree with both of you.
Let me chime in, Leon, if you don't mind. So what I'm seeing, in my opinion, what I'm seeing here in responding to Carsman's question, which is an awesome question. We're in a real estate bubble. We're in an appreciation bubble, my opinion. Okay. And all bubbles come to deflate. And I think what we're seeing is a little deflation thing going on right now. And we're seeing less activity in terms of multiple offers and so on and so forth. So yeah, there's a market correction going on at this point. To where that's going to go, we don't know. But I think the bubble was maxed out a little bit ago, and we're seeing this market correction now. And I think Carsman, Leon, others have seen this, right, with less activity in terms of multiple offers over price, right?
And I'll just add one more thing. I know about 3 people. One of them is actually a family member who they're not actively looking anymore, but they were looking to buy at one point over the past, month or two. And, the market is so, I don't know, people are getting so much more for their house. They've decided to just say, hey, I'm gonna just sit on the sideline for a few months or a year and let this market thing kind of play itself out and let the universe balance itself out. And they've, taken a step back. So I'm kind of wondering if, those factors are contributing to what's currently going on. But I do know a few people who've actually said, hey, we're going to just kind of pump our brakes a little bit and, just kind of, take a break from looking. So.
So Carsman, they sat on the sideline because they expected the prices to go higher, or
well, they're sitting on the sideline because if they do see a home that they like, let's say if it's 300K, they don't want to go in and look at the house and now they have to bid, 350 or 340 to actually get the property. So they're kind of just hoping that things will kind of level itself out a little bit. Will it do it? I don't know, but
as a buyer, I get that as a buyer.
Yep.
Smart move.
Yep.
Again, in a bubble, it might be smart to wait until it deflates a little bit and then hit the downswing. But again, this market is so volatile. You're going to get 6 different opinions as to what this market is doing right now. But I offered my opinion right at this point. Anybody else?
Yeah, I think they're smart. My son, who lives out in California, we've been going back and forth. He wants to buy a house so bad out there. He's like, Dad, he goes, guys are buying houses. They're holding them for 6 months and they're selling them for $100,000 more than they're paying for them. He has a buddy about a place 8 months ago and he's selling it for $200,000 more than he paid for it. And I told him, I said, wait, I said, man, when you're buying a $600,000, $700,000, $800,000 house, yeah, it might go up that much, but what if it goes down that much? You can't sustain. I mean, you can't. Could you lose $100,000 or $200,000? I'm waiting for the market to correct. I could prove Dad was right. It's been interesting conversations with him. I'm trying to get him to hold off, and I think I finally convinced him. But he did ping me today. He's like, Dad, he goes, my friend did it again. I'm like, I know, just wait, it's coming. And I think it's going to happen sooner rather than later. I mean, I think that there's going to be a lot of flippers that are going to be hurting. The smart ones, they'll do okay, but there's some guys are getting into it. They're going to be hurting, but it may not. I don't know. It may not correct, but I'm starting to see it. I'm starting to see it across the country. But it seemed like Rochester was like the hottest market I knew of going for a long time. So,
I mean, it's really interesting to be at this point in time. And I sort of follow Joe Lavabero's approach, and that is to be fairly conservative. But Joe is sort of safe because he's a little bit outside of the window of what it is that we're talking about here, because he's talking about acquiring properties and getting those at a safe value. What we're talking about is, well, what is the market going to do? And are the properties going to actually go up in value, or are they going to stay where they are? And the biggest fear is that it's a decline, unless you would where Carson was, which was with his family members, and that is, it's going to decline, and then maybe they can get it for less money. So the big question is, well, what's going to happen in the short term? I really think in the long term, you're going to see prices actually go up. And that's driven by the availability of houses broadly across the whole US. There's so many more houses that are not available to folks than was before, until, it's hard to imagine that you go through something that doesn't last at least 5-10 years, where you're really, the price is on a sort of steadily incline, just sort of going up a bit. And so, we'll just have to see. But in that type of volatile type situation, then I basically bow down to the pro, Mr. LaBarbera, and take the conservative approach to things.
One of the things that I've seen is 60, 90 days ago, people could have just bought a piece of property, lipsticked it up. Actually, not even lipstick, chapsticked it up and sold it. And one of the things that I like to make sure of is that instead of going in and just lipsticking it up, in order to make sure to really sell it, especially, because I've seen the, not as many purchase offers come in on certain properties. I like to make sure I leave it, when I buy it, I know I'm going to fix it up nice and make it look nice. Where I've gone into some people's houses where, they'll put in a countertop and not change the cabinets. And by the way, I've done that before, and I had to go back and get that taken care of. Okay. Because it didn't sell. So for me, I like to make sure that, and not only just for the flips, but also for my buy and holds. Anybody that knows me, if I buy and hold something, I want to buy it at a deep enough discount where I don't care if the market goes down by 25, 30%, I'm still going to be okay. All my buy and holds I've bought at 50 cents on the dollar, every single one of them, some of them even less than that. So I'm just like Leon, I'm very conservative. I want to make sure I don't leave any doubt. Worst case scenario, if I ever have to get rid of the properties, I'm going to be just fine instead of being stuck. And, and again, we can't predict the future here. At the same time, if we're going, for me, and again, it may not work for you. Okay. Everybody has their own different risk tolerances. If you're dealing with one house, what I've noticed, if you're dealing with one house and you have cash behind you, you can take that chance. But if you're dealing with 6, 7, 8, 9, 10 properties, that is not something that I would want to take a chance with.
And I think Leon and Scott both bring up great points where Leon is speaking from a more conservative end, and Scott's thinking, you really don't want to get, caught not being able to sell a property for what it's, worth, because as a flipper with me, that's kind of one of the delicate aspects of it, making sure that you could get what you can on the back end and bid the right price on the front end, so that you're not, let's say, overpaying and not getting that money on the back end, but you also don't want to be too conservative and kind of underpay and kind of bid yourself out of a good opportunity. So it's kind of a real delicate time in a tricky market. So I guess that's the struggle that, you know, all flippers are just, if you're buying a rental, kind of struggle with, just finding what is that optimum offer price, hoping that you could get more on the back end. But if you're not, are you going to be, you know, in the negative?
Yeah. It's like the saying goes, 1% doubt, get out. Means you're
Well-
not 100%. For me, I won't do it.
Well, let me, Carsman, that's a great point. The front and back end stuff, it's what happens in the middle. So it's really knowing the rehab cost, knowing your outlay in terms of getting that property to optimum resale value. That's the main trick. That's the main focus on flipping from the front and back value end. So you need to have your team in place. You need to have somebody who or some buddies, several people, tradespeople. You need to get your team together to evaluate that rehab cost to get it to that end value. So the middle part is the most important part. You can't guess at that. If you guess at that, you're gambling, which is fine. If you're a gambler, that's okay. I've done that before. But that's really the thick of it right there, is that middle cost.
And just to add to that, I don't want to talk too much here, but even with that rehab cost, what I'm starting to find is a lot of the costs are going up, even when it pertains to material. I mean, if you're getting a roof done, the you know, the plywood is more, windows are more. I was in Home Depot a few weeks ago looking at appliances, because I typically put all appliances in my property. Even stoves and refrigerators have like went up substantially. So I agree, Carl, you know, you really got to do your research and get the pricing right when it comes to trying to figure out what you're going to get on the back end, because things are just skyrocketing when it comes to the renovation costs.
Yeah, very, very difficult time right now for flippers for that very reason. I mean, prices have gone up to 300%. So essentially, you need to buy the property 200, 300% lower. And, you know, who's willing to do that, right? So those sellers don't know those adjustments in prices. They don't know that. So you're up against this wall of here's what things were, but no, here are how things are now in terms of reality, in terms of cost. And so, yeah, it's something you have to deal with. And it's very tougher right now to negotiate a flipper deal.
Yeah, I mean, it may sound like a negative, but you know, I just put it out there because it is the real world. You know, we can always argue whether, okay, argue is not a good word, debate whether you know, it's a gamble or not. But we're all humans and all in this situation where we don't know what's going to change and what's going to take place that's going to be different. From that perspective, we're always in a gamble. And the reason why you want to play the conservative side of the fence is just because of the fact that it allows you to be in, because we're only talking, okay, you know, I'm a numbers guy, scientific oriented guy. So you know, it's all about, well, what's the probability and statistics that say that if you do this, you're going to be right or not, you know? So you take the numbers into account and you say, okay, so the thing that's going to happen is I'm maximizing my chances of success. You know, I've taken into account as many things as I can, and I'm in the best position, because, you know, nothing is guaranteed to any of us. So I agree with both of your comments, yours, Carson, and also my friend, Mr. Carl Weeks. Not that Carson is not my friend. I just look forward to seeing him in person at the picnic.
You got it
there.
Carsman, is this your first picnic you're going to, or you've been there before?
It will be. I'm looking forward to
Oh my God.
these spicy ribs that I'm hearing about.
Yeah, but he's going to tone it down a little bit. Okay, so they'll be
Yeah,
available for everyone.
I don't want to singe my taste buds in my stomach. That's for sure.
Let me put it this way. Let me make sure I clarify. I'm gonna have spicy ribs, those that are kicked up a notch, so that I actually went to New York City once, and the people that had my ribs before, and I never saw a group of people so pissed off when they started tasting the ribs. They say, "What happened to the spice? Where's the spice? You don't bring stuff down here to New York City that ain't got spice, you know?" And so what I'm going to do this time is I'm going to bring spice and I'm going to bring mild, okay, so that I can address the taste that everybody has.
I look forward to
What's
the mild.
that
That's for
red
sure.
sauce that Mary Jane likes that I bought for her? Some red sauce out of Austin when I came back from a FFREIA meeting in Texas.
Marinara sauce or something like that?
Who?
Marinara?
No, not marinara. That's the Italian side. No, red. It's spice sauce. It's
Oh,
something
spicy.
that it's beyond.
Oh, Shiraka?
Shiraka. That's it. Shiraka.
Oh, that's good stuff. Yeah.
Yeah,
Oh, my
Shiraka.
God.
Shiraka is not even, for her, is not even hot. Okay.
I know. She's a Louisiana girl. I know.
Yeah. But I got her to tone it down a bit, you know. We would sit at the table and she had this bottle of Shiraka and then it just go. It's like, oh my goodness, it's gonna be Shiraka. And but she doesn't do that anymore. So she's a little bit toned down now, but she really likes things spicy, as you would expect.
I would expect.
Carl, I have a question for you.
Sure.
Given how hot the market is, maybe it's starting to cool a little bit, but would you suggest to some of your investors, like if their unit came open, to maybe sell it as a single family residence right now because the market's so hot, you're going to make so much money? Is it worth it to sell it instead of just making it back into a rental?
When you say a single family home, you mean a single family home or two family to a single family? You lost me.
No, what I mean is instead of having it as a rental, like it's a single family home now and they're renting it out. You being a property manager, you don't want to lose any properties, of course, but is it worth it for some of these investors to sell their house as a retail sale because the market is so hot right now? You know what I mean?
Absolutely. And that's exactly what happened in about 3 of our properties. And again, location is the most important, Scott, right? So the location has to be right. We had 3 properties that were rentals that we geared towards owner occupied. And sure enough, it maxed out the sale value. Sure enough, it did. So we had one Arch Street, East High School area. I forgot the other 2, but we had 3 of them. But great question. You're absolutely correct on that. And whenever there's a potential advisement to do such a thing, we're doing that recommendation.
And I have a good friend, house coming on the market. It's a duplex in Brockport. I owned it and I sold it to him and he totally rehabbed it, upgraded the electrical, did some other good upgrades to it. And he's going to sell it. It's a 3-bedroom on one side, 2-bedroom on the other side. The 2-bedroom is occupied and the 3-bedroom he's going to leave vacant. So it has, so it could be owner occupied. So I think he's going to put it on market for $199,000. It comes with a decent sized yard. Like I said, it has a big barn in it, 2-story barn. The roofs on the house and on the barn are about 7 years old now. And it has a garage on one side, and on the other side there was a garage, but he knocked it down. It's now a nice parking spot. So if you know anybody looking, Rockport Schools, big yard, income on one side, wants to live in the other, he's going to be selling it for $199,000. So if you're interested, let me know. I can shoot you his info. He did a great job rehabbing it, so it's really nice.
Oh, Scott, every time you come on, we got to know where you are. Where's the camper parked? Come on.
Lynchburg, Virginia. So yeah, we're in Lynchburg, Virginia right now.
What's going on down there? What business or what? Or mother-in-law?
Mother-in-law and business. So, but more mother-in-law than business right now. So
Right.
yeah.
What you
What are
want?
you gonna be there for?
Let's see, we're gonna come up. We're supposed to come up this weekend, but because of some family things, we can't. But we're gonna be up at the end of July and staying into August. I'm not sure how long. Because of some medical situations, I'm gonna stay with my mother-in-law. We may or may not be at the picnic. I'll just say that right now. If we're gone, I hope to shoot up maybe for a day for the picnic and drive back. But we'll see what happens.
Yeah.
So, and then we're gonna take care of my mother-in-law, and then we'll get on down the road here. Plan on being in Florida in October, end of October. We plan to be into Florida, and then we'll be out in California again for around Thanksgiving, Christmas time frame.
Awesome. Enjoy, bud.
Yeah, thanks.
Real estate on wheels, right there.
That's right, man. I go look at any storage facility anywhere in America
That's
right now.
That's
And yeah, right now, if I didn't have the situation with my mother-in-law right now, medically, I'd be in Vegas right now. There's a big independent self-storage convention in Vegas, and lots of my friends are there. They're sending me pictures and videos and all that. And last night, a bunch of guys were out at a cigar bar, and you know, I don't smoke cigars a lot, but when we get together, we'll have a cigar, and it's fun. And dude, miss you. So, but I'll be there. I'll be there again. So I must fly to Vegas today or tomorrow. There's a great self-storage convention going on there.
Well, Scott, you know, family comes first.
Yep. Yeah, for sure. Thanks. And the thing about real estate, I'll tell everybody right now, the only reason I can do what I'm doing right now is because real estate. If I didn't learn from all you guys on building real estate and all that, I wouldn't be able to, you know, be where I want, when I want, for as long as I want. And because of real estate, I have flexibility now. My W-2 corporate job wasn't done it. My W-2 corporate job supplied my family well, and we raised kids, and I built a real estate business while I was working at W-2. You know,
Yeah.
like Joe Lauber says, 70,
Yeah.
80, 9 hours a week is not unusual. And I was able to transition over into real estate, and you know, anybody who's new at this, just stick with it. That's all.
I remember those years, bud. That was awesome.
Mhm. Yeah. And I have no business degree, nothing like that. Just a simple guy, just out there hustling, networking, and just putting deals together and being conservative, super conservative, like we were saying here. Right now in the market, I would be very cautious on, like Joe said, buying a house. It's going to take 6, 9, 12 months to rehab. I'd be very cautious on what my exit strategy is on that right now.
I did have a quick question for you guys, if it's all right. Like, as we're talking about this, just still trying to think about the right way to word it up. So I apologize if it doesn't come out super straight. But like, one thing that I've been thinking about a lot is like the refinance side of this. Like, we're talking a lot about like sales and flipping and wholesaling, and you know, stuff that to me, like if we think about like Joe, your example earlier of like, you know, flip of the switch, all of a sudden, you know, there's a lot of foreclosures going on the market. Like, we'll run with that as the example. To me, like the flipping would be a pretty instant hit because now there's so much inventory to hit from right away. So that would hurt pretty bad. But in terms of refinance, which is mostly, I have 2 properties that I have out that I'll be refinancing within the 6 months. So that's kind of like where I've been thinking. Do you find that to be just as reactive as things change? You know, when you're looking at properties that, you know, right now when you run, there's a lot of juiced up comps out there that you're looking at. Are you still being just as conservative, or would you recommend it at properties that you're looking to refinance 3 or 6 months down the road?
For me, I'm sure there's other people who can speak on this. We just did a house over by Rochester General, And we knew that we could get more because of the market.
Mhm.
We ended up, you typically used to be able to buy in there for like 60,000. We sold it for 135. It appraised for 145.
Mhm.
But we paid 52 for it. So no matter what, if we end up having to keep it and we had to refi it out, we were safe. Again, I'm very conservative when it comes to stuff like that. Yes, when the numbers are juiced up right now, refi your, do what you got to do, in regards to that. But if I refi out a property, I recently did a refinance, and I don't like to be super leveraged. My stuff, I'm somewhere around 51% leverage, 51, 52%. Because that's me. Again, that's me. Don't take what I say as gospel. I'm sure Joe McGuire is probably different. Scott's different. Leon, everybody else. I like that security blanket. It's a nice, warm security blanket. I don't have to worry about if the market falls tomorrow, I'm in trouble because, I owe $90,000 on $100,000 house, and all of a sudden the market goes down and it's only worth 80. Okay. I'm only leveraged at $51,000, $52,000. So if it falls, I'm going to sleep just fine.
Because it's tempting to pull that money out right now. You want to grab, especially, a younger guy who's still growing. It's tempting to grab that money and go toss it into something else. But I know you're not preaching gospel, but if it's you, you're leaving that, you're taking out what you need and you're leaving the rest in.
Let me chime in, Brett. Refinancing is just an awesome platform to, go down the road, right? If that's your game plan to buy, rehab, and refinance, it's an awesome model. As long as the expenses can handle the refinance costs, total property costs. If that happens, move on to the next one. Refinancing is okay. I got to tell you about a story. I won't mention names, but extremely successful investor in the Works Landing area. I think some of you guys know him. But that was exactly his model. He would buy a property, rehab it, the refinance cost. He refinanced that took care of everything, and the income took care of the refinance. All costs involved. Refinance. He didn't care about profit. It was weird to me. He didn't care about profiting on that because his ultimate motive was resell value. Well, we'll get to it in another minute. But you get the idea. So that's exactly the model, and it can happen as long as the numbers match up. That's the key thing. Due diligence, make sure the numbers match up. So it's an awesome model to go down.
For sure, appreciate it.
And by the way, when I refinanced, I was still able to pull out well over 6+ figures. Okay, so when I say I was conservative, I was very conservative. So I still was there. And you're right. Could I pull out more? Yes. But I'm like, so I'm like, I just, everybody's different, but I was still able to pull out that amount of money and still
have your cushion.
52%.
Yeah.
So I still slept very nice and warm. The money was like a thermal blanket on me, the extra money on it at the same time. And I understand because you want to take the money out and run. And if you you want to, do what you got to do.
For sure.
I don't know. I know Scott and Joe and everybody else, I'm sure they have their own opinions on that. I don't know. What do you guys recommend?
Yeah, I'm always as conservative as you are, Joe. I'm probably a little more conservative. I like the 51% number. I do like that. But my idea is I never want to be a distressed seller. I do not ever want to be a distressed seller. I may be motivated. I'm never going to be in distress. So I never want to be underwater. Sometimes I have to work at it, but and offer terms to get up to what I need. But I learned a long time ago because I'm older. I mean, it depends upon life cycle also. When you're younger, when you're younger, I bought properties I won't drive down the street now. You know, it's it's life cycle where you are. As you get older, you're more conservative, so I'm more conservative, but I like to, I agree with you, you know, having the thermal blankets, sleeping at night. The only time I did not sleep was on a business deal, actually. And it was on my partner stealing tens of thousands of thousands and thousands, tens and tens of thousands. But no, you don't. I learned from a guy down in a lot, without the story, you know, Jimmy Napier. Never over leverage. Always be prepared for the downturn. That, yeah, I'm not saying you can't be aggressive, but always be prepared for a downturn. That
Greatest advice
never be
ever.
distressed.
Greatest advice ever.
I agree.
Oh my God, prepare for the downturn. Let me go take that a step further. So in my training, you know, everybody said through your courses, you know, develop your exit strategy. Exit strategy. No, develop a strategy for that downturn, that huge crush. You got to develop that plan because there will be that plan eventually, especially during COVID. There was a bunch of that stuff going on. But Joe, you're so right. Great advice.
That is fantastic advice, Joe. You should put that on a poster. Tell you, that's fantastic. And besides, we all know it's coming, you know? And the other thing too is that if you're not over leveraged, when stuff does happen and opportunities come, you are in such a position of strength. It is just, it's unreal. That's why I like doing that, you know? And of course, depending on what everybody's goals are, you know?
Yeah.
Right. What your goals and where you are in the cycle, you know, if you're beginning, if you're middle, or if you're at the end.
Well, Joe says it best, though. Each one of them, those cycles have a risk tolerance, right, Joe? Back in the day, we were just like, I'll do anything. You know, it was crazy, right?
Well,
Each cycle goes along. Each cycle goes along. It's like, oh, I gotta tone that back a little bit. All right. But yeah, back in the day, I was like flying with I'm high risk.
Right. Yeah. I had a house. I had to call the police to go visit my house. You know, it was terrible. Yeah, it was. But the house printed money. You know, that was wonderful.
We could go down stories there, Joe, but not tonight.
Maybe at the picnic.
Yeah, I will say, Brett, it's too bad you can't get a HELOC on your rentals. I mean, maybe you can, I don't know, but as far as I know, you cannot get a home equity line of credit on your rentals. Yeah, it'd be really nice if you could, because then you have that money tapped and available, and you just have to have the discipline not to over leverage yourself. It's tough to say, like Joe said, if you have $100,000 in equity on a property, do you leverage that property up to have $100,000 to buy more properties? With what's coming, it's definitely a risk tolerance, but you also have to have the discipline. You know, you have money in the bank, you let it sit there, you're going to make payments on it because it is a loan. It's not a line of credit. If you get a line of credit, man, that would be the best. But right now, if you got the risk tolerance and discipline, it might be worth it. If you have something that has a ton of equity in it, it might be worth it to look at taking that money, refi out, take $100,000, put it in the bank. When the right opportunity comes along, boom, you got the money. That's a big thing. But same thing too, and Joe McGuire can speak on this. If you come across a deal and the numbers are right, you'll find the money. I mean, I have people in storage coming to me all the time, and they're finding some decent deals, and I can find the money to put together. But I have other people come to me on something they think is a deal and it's not, and I have to explain to them why it's not, and they get pissed off. They're just like, you don't see what I see. And I said, that's fine. I look at it differently, but I wouldn't do this deal, and here's why. But man, to have the cash available with what's coming up, if we had a crystal ball and knew when it was coming, it'd be great. But to have the cash, and if all these foreclosures start hitting and short sales and all that stuff start hitting, man, you could be sitting in a great position if you have cash. What you could do too is put in the offer, say I have cash, you buy the property with your cash, then you take that and you refinance it again, or you come to a money lender like Joe McGuire.
I agree with you, Scott. I mean,
Sure.
I like the saying used to be cash is king.
Collateral that I own free and clear. Equity position is on properties. Yeah. So, and I hope I didn't freeze.
Yeah, you did. I'm sorry. I kind of talked over you accidentally. I'm sorry.
So,
Yeah.
I thought you had ended.
So, you know, we have some of our sort of old timers and folks who are used to speaking or who speak relatively frequently in these types of sessions. So Marlene Schofield just put into the chat that you can do a commercial credit loan if you're trying to do something in the way of refinancing your rentals. Because she works a fair amount with Mary Jane. I was thinking of her when that question came up. Marlene, will you tell us a little bit about what it is that you've done? And I'm just trying to get some more folks to talk about, you know, their experiences and what it is that happens versus us sort of dominating the discussion.
Well, free and clear, if I don't have a mortgage on it, I've gotten a commercial line of credit through my LLC. Or I'm trying to think, maybe I did that before I had my LLC. So they'll let you do a commercial line of credit. The parameters are a little bit different, but still it's sometimes better than doing a mortgage because you can use a portion of it that you need instead of, you don't have to use the whole thing at one time if you don't need it.
Marlene, how long have you had the line of credit? Just, I mean, without any, I'm not trying to ask a personal question.
Oh, no, that's okay. Usually they're about 5 years. The first one I had for probably 4 years, but right now I'm applying for another one. So they're usually about 5 years you can have them for.
And I know about them a little bit at a high level, but typically the idea is you make interest only payments when you draw on that money, correct?
No, I believe I pay on the principal also.
Oh, okay. Okay.
Mm-hmm.
I would be very personally, I'd be very careful with your bank on any bank on that. You know, if you follow that, Brett, you know, the idea is great. I'm all for it. I have some, but I found that some banks and some lenders are better than others.
For sure.
I'll say, just based on personal experience, Canandaigua, I will say probably 80 to 90% of home builders and large remodelers in Rochester have a commercial line of credit of some kind with CNB. They do. And they use it to bridge the gap in cash flow when they're building a home. I don't know what their interest rates look like. I don't know who they work with in particular, but almost every home builder that builds more than one house a year in this market has an account with Canandaigua. They're bar none the number one lender to that industry.
I was going to mention that, Andy. CNB is lead in commercial line of credit. Marlene, is it you know was that CNB for you?
No, I've had mine through Savannah Bank.
Okay.
They're probably good also. I'll be honest. I had some with Bank of America. I cannot say, on a public thing, a meeting such as this, in a FREIA meeting, I cannot use the words I want to use about Bank of America. They're not good, Carl. And they just took my lines of credit, which hadn't been, I had only used they just destroyed them. And I called them, I said, what are you doing? And they're going, well, they're concerned about, the economy and this and that. And I go, yeah, and what's my balance? It's called prudent borrowing, I'm not running it up just to run it up. And they're just impossible. So if Savannah, Canandaigua, I like a lot of banks, I guess, but I have nothing. If I could, well, I have to be careful. But I cannot use the words I would use for Bank of America.
I have similar experiences with Bank of America. Personally, I say stay away from Wells Fargo, Bank of America, Citibank. Chase is okay.
I like Chase. Actually, I do like.
For a commercial bank, for business stuff, Chase is really good. However, as a business owner, they will not talk to you if you have less than like a 700 or 750 credit line. They don't care. They don't care. They're
I guess I do.
I don't want to talk to you. So for me, it was fine, but I've talked to so many people who get pissed at Chase, and it's like, well, I mean, what do you do? Right. But
yeah,
I largely concur with all those comments that Joe and Andy just made about the banks. I mean, right down to the specific bank that they named. Okay. Bank of America, I have an account that I've had with them for a while, and it's like, why do you still have this account? You should cancel this tomorrow. It's like, yep. So yeah, I completely concur.
I like dealing with the smaller banks here in Rochester, and you can actually call them up and say, hey, I deal with CMB, I deal with Family First and ESNL, and they're all just so fantastic to deal with. And like Chase and all those other places, you just get lost. They don't, to me, I don't feel like, they don't need us, bottom line. So, I mean, I do like Canada National Bank and Family First and ESNL. Those are my three.
Yep. Absolutely.
Good evening, folks. Can you guys hear me okay?
Yes, Greg, go ahead.
I'll turn on my camera just for a minute. I just want to introduce myself. My name is Greg Bainbridge. I've been working in industry, 22 years at Xerox. I was an operations manager over that time. I had bought in 3 bank foreclosures and a couple other houses. And of those, I had a triple and a double, 2 doubles. But I sold it all, liquidated it when I started having a family. My boy is now older. He's 17, he's going to be a senior. So I've resigned from Xerox and I'm opening up my own LLC, Time Back Contracting. And I wanted to get back into real estate and flipping houses. Randy Hilliard actually had recommended me to take a look at Freedom First. So I wanted to introduce myself to the team of Freedom First. I thought this would be a good opportunity. I know we're just about winding down for the hour. So I look forward to getting to know the team more and be a part of it. And it seems like you guys all have been in this market for quite some time. So I'm very interested in learning from you guys, and hopefully I can contribute as well. I'm very excited about it, to be self-employed, if you will, and have my time back. But I just wanted to introduce myself to you guys, and I look forward to working with you guys. And Leon, I'm gonna probably sign up as a member here soon so I can come to your picnic because my mouth's watering from the all this talk about ribs.
Great, well, great. I look forward to seeing you at the picnic, and Carl is getting ready to say what I'm going to say now, and that is, I put my ribs up against anybody, especially dinosaur. So, look forward to seeing you there, and yeah, great place to share, learn, and get further information around how to be successful as a real estate investor. Carl, go ahead. I'm sorry.
So, Greg, welcome. your fresh air here. You said you were doing maintenance. What were you doing?
So I was an operations manager in manufacturing at Xerox. Before that, I was electrical engineer, integration engineer, manufacturing engineer. I've traveled to France. I've been all over the place. And then I was an operations manager. I had 160 people under me, union employees as well. And it just was time for me to move on. My wife and I have been talking about doing something like this for a very, very long time. So I put some cash away. The college is good for the boy. And, you know, the boy's going to be a senior, and I would be so happy to flip a house with my son before he goes to college. That would make me so happy.
There you go. There you go. So I thought I heard you say you're a maintenance contractor or some kind of contractor.
So my LLC that I'm opening up is called Time Back Contracting LLC. So I met with the attorney yesterday and starting that in motion. It's gonna be kind of an umbrella. I'm also doing some contracting work on the side, decks, replacing windows, down to rough opening. You know, I grew up as a landlord's boy since I was 12, so very, very exposed to all kinds of handy type of environments. Learned a lot from my dad, learned a lot not what to do for my dad, you know, so I'm excited to get back into it. And I just really wanted to introduce myself. I thought this was a great forum for it. So,
great. How'd you learn about the FFREIA organization to be on tonight?
So Randy Hilliard was one of the gentlemen that worked for me. I know Joe, he spoke highly of you. He also highly spoke of Scott. He actually gave me your guys' phone numbers to reach out to you guys, which I didn't feel comfortable doing until I had, you know, the proper.
You're always more than welcome to.
Thank you, Joe. Thank you.
So Greg, if you're 100% into this contracting thing, whatever your skill set is, be aware FFREIA has a vendor membership program that to promote your business, your LLC, what you do. So keep that in mind. If you want to market your services, we have a platform here to do that.
Oh, so perfect.
Keep that in mind.
Yeah, I need to spend some more time on the website. I saw this on the calendar and I wanted to sign up for this because it was meeting the expectations of what I wanted to, buying and selling and opportunities, and hearing you guys talk, because you guys are seasoned veterans in that market. You know, I liquidated most of my stuff in 2006, 2007. So I've been out of the market for a very long time.
No, your timing was perfect. What the hell are you talking about?
I was going to say, you couldn't have picked a better.
How did you do that? Did you have a crystal ball?
No, but I did do very well when I liquidated.
Oh yeah, you did.
Oh, that's funny.
Oh,
well, welcome, Greg. That's fantastic you're here.
Thank you. I'm excited.
Yeah, it was called the crash.
That's funny. Oh man.
Thanks, guys. Have a good night.
All right. Thanks, Greg. Welcome.
Thank you.
I know we're just about done over here. We only got a couple more minutes left over here. I know I'll be able to hang out for a few more minutes in case anybody wants to go over anything or talk or whatever. You're more than welcome to. I know it's about 8:30 right now, so I want to be respectful of everybody's time over here. And I want to thank everybody for joining us here tonight. Get signed up for the picnic. Next week is going to be the landlord meeting or the housing providing meeting. Sorry. Same time next week. Thank you, everybody. I appreciate it. Everybody have a great night. And next time we're on, Scott will tell us about the other storage facility he's going to buy. I think he's buying one a month right now.
Yeah.
I hope so. I think so.
We out? We're out. We're good.
We're good.
We're good. I'll hang out for a little bit. Yep.
Thanks everyone for being here on the call.
Thank you. So Scott, are you looking at check out there? Are you going to be putting in some more offers on another facility this week?
What do you say, Joe? If you're not writing
Are
offers,
you gonna
what?
be putting in another offer, another facility this week? You gonna leave anything for the rest of us or what?
That's like somebody asking Wholesale Joe if they're gonna leave anything, if you're gonna leave anything for them. So, no, we're just, you know, if you're not writing offers, you're not marketing, you know, gotta get out there, write offers. The biggest shift in self-storage is you write a couple of offers a month versus in real estate, you know, you're writing 5, 6, 7, 8, 10 offers a month on residential real estate. So, but learn a lot more about doing your homework and all that before writing up the offer. And we're writing up offers with a 45-day due diligence. Get us all the information. We have 45 days to look it over. We can get out of the deal. in
Whatever my
45.
wife says.
So Scott, what do you do? I mean, if the deal is still fantastic and, you know, all of a sudden you find something that the people have to get rid of and you know, it's a great deal, but he doesn't want to do 45 days. I mean, it's good enough. Can you do your due diligence and you say, look, can you do it in 2 weeks? If the deal is that good and you know someone else is going to come in and they're going to pay cash for it because you know it's worth a couple $100,000 more, what do you do?
Joe, when you walk through your house, can you do your due diligence in 5 minutes?
Sometimes it varies, you know, but a storage
In 5 minutes, you know what you're gonna write, right? You know if it's a deal or not, right?
Yeah.
It's the same in self-storage.
Yeah, but you're
So-
doing it from like 500 miles away. So you got to get the numbers.
Yep. Yeah, I write up the contract. I'll, you know, once it's under contract, just like your real estate deals, once it's under contract, you got it locked up. They can't sell it to somebody else, but you can get out in 30 days or whatever the due diligence period is. But they're locked up. They're locked up on contract.
Yeah,
Nobody else can come steal that from me.
Yeah, but if you know it's a great deal, okay, and you know someone, and the guy doesn't want to do 45 days. He just wants. They're tired of it. Can you do it in 2 weeks? If you had to.
I can if I get all the documents. You know,
Okay.
like the Illinois deal, $35,000 in property taxes.
That's just insane.
Some people would have bought that without even checking, you know? It honestly, if that didn't have $35,000 in taxes on it, if it's generating $90,000 a month, that property would be worth about.
You mean a year? 90,000 a year?
Yeah, 90,000 a year. Yep, I'm sorry. That property typically would be worth about $700,000. But because it has that big tax bill on it, it's still worth about 500.
Well, yeah,
So, yeah,
because at a 10 cap, you're at $450,000.
right, yep,
So
yeah.
what do you buy cap rate wise? What do you look? I know it's one of the factors, but cap rate wise on a storage unit, what do you look to buy it at? And when you want to sell it, what do you want to sell it at?
We're typically selling them at about a 7 to 8 cap. And we're buying them. I just bought one that was, I want to buy them stabilized. Once they get stabilized, I want to be at a 10 cap at least. You know, I want to be more like 11 or 12 cap. But stabilized means 90% occupied, rents up to where they should be.
Yeah.
It's like buying rental houses. You know, a lot of people don't raise their rents. I didn't either. When I had my rental houses, I would once in a while, but I never really raised rents. First thing we do is find out what the market rents are, and we raise the rents right up to that. A little bit below because these tenants are there, they've been there, so we'll raise it up. You know, we don't want them to move. And then we figure 90% occupancy. That's the thing that Mike Wagner teaches is you never want to be 100% occupied because your prices are too low. So 90% occupancy is it. And I want to be at a 10 cap that, you know, at least when I'm buying it, I won't buy a property that's in a 9 or 8 cap. So, but we're selling them at 7 and 8 caps right now.
Okay. I was wondering about that.
Is it mostly like mom and pop operators that that type just mismanaged over the years, and that's where you can come in and add the value to it?
Yeah, right now, 2 of them that we're buying. If we take that one, Illinois, I'm still not sure on that one. It's an estate. And then there's another one in West Virginia I'm looking at that's an estate. Both of them, both the kids own them. The kids really don't want anything to do with them, but they know it's worth something.
For sure.
Yeah. So mostly mom and pop, people ready to retire. People just tired of dealing with it. That's where our best deals are. But we're buying some that are run fairly well. They're just with automation and stuff. We get rid of the 40.
You froze up, Scott. You froze up. You're buying them at what?
There, we look at their tax return if they're paying somebody.
Scott, you froze up.
I'm talking too much. That's the
buying at what?
problem. All right, hold on one second.
No, you're there. We can hear you now.
Yeah, it's because I'm talking too much. I keep freezing up. But a lot of these people are paying somebody on site to manage it, and they're paying these people $40,000. If I can take that off the bottom line and my automation expenses are $5,000 a year, I just added 35,000 in my bottom line. So that's what we're seeing a lot of. Like I said, a lot of people are ready to retire. They've just had enough. Kids have taken it over. So that's what we're finding.
Cool, good deal.
Yeah.
How many units do you have now, Scott, or doors?
I think I don't know, Joe.
Is it over 500?
It's about, yeah, I think I'm about 500 right now.
It's fantastic.
Yep. So all from networking. I do not own a single facility myself. I'm in partnerships on every facility that I own. And I am, in some cases, I'm a 19% partner. In some cases, I'm a 50-50 partner. So every facility I own, I'm in a partnership on. So, because I'm lazy and I don't market, I let other people do that. So, but they're making money. I mean, they're marketing, and you know, one guy who paid a wholesale fee, it was $60,000. We paid him in wholesale fees on a facility.
Wow.
Yeah. I'm willing to pay that to you too, Joe. If you find me the right deal, I'll pay you $100,000 wholesale fee.
Heck of a check.
That's a month for you.
Yeah, right.
Mhm.
Oh my God, it makes me laugh.
Yeah. But no, Brad, I'm glad to see you're on. I know that we've talked a few times. Glad to see that you're on. You've probably been on before.
This is actually only my second meeting. I made it to the networking event last week because I just got moved back from Minneapolis. So I think this is like week 3 back in the area now. So can finally come, and I didn't realize you guys were doing it on Zoom, or I would have been here a lot sooner, but my dad dropped the ball on telling me that one.
All right, better late than never.
Yeah.
That's what happens when your dad's an old dude, man.
I know, you
So-
can't get him out of the powder coating plant. He's stuck in there
Yeah.
right now. So
I
now
know he is.
we got to represent on the McManus front.
There you go. Yeah, for sure.
Oh, that's funny. Holy
I know he's married to that business. He's doing very well with it from, you know, when I talked to him, but
For sure. Yeah. And he
Yeah.
still has like his couple of rentals there. The big one is he's got that red, like the apartment that was like the lawyer's office in front of the business. That was like the first place he ever got, and the lawyer kicked the bucket. So now he's converting the office into an apartment. And of course he's doing it all himself because that's the way he rolls. So he's a crazy man, but he's keeping busy with it. But I don't know. He still enjoys it.
awesome for him. Yeah. Tom always said, hey.
Yeah, will do. I'll drag him back kicking and screaming one of these times. He'll come eventually. Once he gets done with this rehab, he'll be freed up, and I'm sure he'll be joining back.
Nah, I know
Until he
your
goes
dad.
and sinks himself into another one. He's claiming
That's
right
right.
now he's not going to buy anything like he wants to do turnkey stuff now, but he's going to find some other crap hole that he's convinced he's going to do on his own.
Mm-hmm.
Well, Greg there, or Brett, I'm sorry. when you join FFREIA, come to the picnic and bring them to the picnic as your guest. It
Will
makes
do.
perfect sense.
Well, dude, he's a member, I'm pretty sure still, so he can go on his own.
Think
It's just
so.
getting him. Yeah.
What's his name?
Mike McManus.
You'd have to
Oh,
ask Susan.
You know him. You've
Susan
met
is
him
still
many
here,
times.
so.
Yeah, it's been about a year, I think. I know he was going for a while. It's probably been about a year since he's been though.
Over longer. than
Yeah, I
that.
think ever since we went to Zoom, I don't think that he's really showed.
Hmm.
I think
Yeah.
he has.
He would show up at the Bayfront. He would show up.
Right.
Yeah.
Mhm.
We'll get him
Oh,
coming
okay.
back though.
Yeah.
Okay.
Yeah, get into the picnic. Tell him when the picnic is and just say, block out your calendar right now, Dad.
Will do.
So-
Will do.
Yeah. It's at night, so, he's not gonna be at the powder coating plant, he has to walk away sometime.
For sure.
Oh.
For sure. No, there. And listen, the minute I heard ribs that are better than dinosaur, it's done deal after that. So
You guys in your. I tell ya. Oh.
Yeah.
Lord.
Funny, man.
Well, what are you gonna do? All right.
All right, so who's closing on something this week? Well, today's Thursday. Okay, who's closing on something this week or next week? Who's buying or selling something?
Actually, Scott, I look at
Except for
other.
you, Joe, we're bored with you.
I
Joe
I
LaPavera, we're
diversify,
bored with Joe
and I'm in
McGuire.
other areas.
Oh, God.
Are you buying or selling something, Joe McGuire?
I am, no, but I'm looking, and actually I was talking to somebody, I look in other areas and I diversify across a number of investment categories.
Mm-hmm.
I like to spread the risk or not be concentrated. So, but right now I'm looking down south for paper and property and a business. But it's in non-judicial areas.
Okay.
And actually, we
Bob
are
Rivera,
trying,
what do you-
I know Leon had mentioned it a while ago, but we're working at being able to offer that to people also.
Cool. Lava Bear, what are you closing on?
We're picking up one. Well, we're gonna get rid of 2 properties, which are 2 or 3 weeks past due. We're selling those off. Those are 2 rentals. We're picking up 2 rentals, which already got sold. Put another offer in, which I'm gonna find out tomorrow if we're gonna get that one. And there's something else I can't even remember right now. There's gotta be, I need this water. I gotta look.
I know. It's when you ask, how many doors do I have?
I know, it's kind of funny. I'm grateful. I'm thankful.
Mhm.
So it's just, it's been really interesting couple of months. So,
Andy McQuaid, you signing on any big clients next week?
No new ones in the next week. I'm still tearing through getting the latest one, the information that they need. So that one that I signed, they're a multinational company working in all 50 states, and if everything goes right, they'll have paid me over 20 grand by September 1st. And this looks to be like a 3-year project. So
Oh,
yeah.
awesome, man. Congratulations.
Well, thank you. That's, like, again, it's whatever falls in your lap. Just, if you can do it, take it.
we're gonna come to you for a hard money loan.
Yeah, right.
Yeah. There you
play.
go.
6%.
Yeah.
I want cash back at closing.
Right? I don't know about that. 6%. No, we'll talk.
Oh, yeah. All right.
No, but things are good. Things are always
Yeah.
changing and moving. Everybody's always got different priorities and stuff. And there's a lot of changes with some of my existing clients that are moving too. So you think life is hard as a flipper right now? Try being a guy trying to turn 100 or more apartment units over and have everything match your models in this environment. So
And what you said earlier, Andy, about things falling into your lap, you know, there's a saying that says luck is what happens when preparation meets opportunity. Same could be said for things fall in your lap when preparation meets opportunity. And I know you've been preparing. I know you've been working, hustling, doing all that. And man, I'm glad it's happening for you, for sure.
Yeah.
So
I'm not
who
complaining.
else? Yeah, who else got something? Brett, you got anything that's gonna, I know you're doing the W-2 still, but you got
Yeah,
anything going on?
yeah, we just closed on that Norton Street one that I had talked to you about. So we're just getting going on that, and we'll hopefully get refied out of that in the next like month or two here. And then there's 2 places in Canandaigua that we're shooting to close on by the end of the month. So a duplex that I'm going to live in, and then a single family that my girlfriend and I are actually going to take a stab at Airbnb-ing. So we got a couple going right now, but probably going to massage these ones out for a little bit off a decent chunk at once. So I think we're going to make sure all 3 of these go really well before we go biting anything else, but definitely plenty to keep us busy with the day job.
That's great.
Cool. Awesome.
But it's exciting. Yeah, it's good to be back. It was hard trying to do stuff from 1,000 miles away, but it's pretty funny. Again, you prepare and you learn and you start meeting people, and then you get back and your boots on ground and you go see these places and talk to sellers, and stuff started happening pretty quick, which is exciting.
Great. Awesome.
You, man.
Congratulations.
Appreciate it.
So welcome to Canandaigua, right? That's where you're living?
Yeah, I'm up in Marion right now, but yeah, once we get this one, it's going to need a little bit of work before I can get the girlfriend to move into there, but we'll be down there sooner than later.
All right, awesome. Seth, what about yourself? What's the biggest deal you're closing on in the next month?
On market or off market?
Doesn't matter. Biggest one, on market or off market. I know you're moving some property. So what's the biggest thing you're selling or helping a buyer to buy right now?
I got one that's probably around 475.
Wow.
Very nice.
It's a multifamily, so that's interesting. Just closing on a awesome duplex on Buffalo Road, out in Gates Chi-Li area. That was 250. And then I'm looking to probably add something by the end of this year to what I want to do. So that's where I'm at. But everything that you guys mentioned was pinpoint on as far as with this market and all that great happy stuff. Everybody's going to convey it a little different, but you did it well.
All right, I'm gonna make you unmute yourself again, Seth. This is the accountability time. You said you're gonna buy something by the end of the year. What are you gonna buy? What's the plan?
I would like to get a multifamily, probably just on the other end of around the Quake Crossing in Rochester.
Okay, so by the end of the year, I will be buying a multifamily. Where is it again?
So it's bordering Arundequoit. So you can catch Rochester taxes, and then as far as holding it, it's a good area. I mean, everybody has their own spots,
Yep.
but it's prospecting and it's marketing. We talk about the market, but really the deals are found off market. We all know that. So I like being on the ground. I like knocking doors. I'll pound pavement all day. So do what you got to do to get these deals. Don't just sit around, because once it's on the market, over 1,000 people have already seen it.
Yeah. And Seth, how old are you? What, 19?
I'm 21.
21. Man, fantastic.
He's an old man. He's 21.
21. He just started to be able to drink. Look what he's doing.
Yeah,
all
right. Yeah.
$75,000 deal, $250,000 deal. 21 years old. Fantastic, man.
Got my license right out of high school, brother.
Nice.
Good for you, man. That is.
You got to write that down, Seth. By the end of the year, you got to picture it, man. It'll come true. That's the thing. Once you put a date on something, your mind starts thinking. Your mind will get you there. So write it down. Read it every day. It'll be there. So
Scott, I appreciate it, and I'm excited to hear more about what you're doing too. That's neat stuff.
I'm just trying to get to the Joe Lavabera money. That's
Oh,
all.
Scott's
I'm
got
like 10% there.
domination.
Yeah, right.
Scott's got world domination in mind. All
Yeah.
towards Judith.
All right, Omar. What do you got going on? You gonna close on something here? He's gonna go radio silent on me. I'm not frozen, am I? Nope.
Nope, you're good.
Okay,
You're good.
Omar, you're out. Tony, I know that's Tony Smith, isn't it? Yeah.
Hey,
Tony Smith.
hi guys. Hi, hello.
What are we buying? What are we buying before the end of the year, Tony?
I have a
Or
single that
selling?
I'm single that I'm just waiting to close. I'm waiting on the tenants to get evicted before I take possession of it.
Oh, so you're gonna take possession in 2022 then, right?
I don't. It may be. I don't know. I think they've actually vacated the property. I'm just waiting on the attorneys to confirm.
Where's
I'm
that
letting
at,
the
Tony?
sellers.
Oh,
in the
you don't have
city.
to tell us because it's not well, it's under contract, but you don't own it yet. So in the city, all right, cool. Man.
Yeah, it's an off-market deal. I got it through one of my networks.
Nice. Okay. Haha, she thought she'd get away with it. Brandy, end of the year, what are we gonna do?
Hey, what's going on?
Hey, what are you gonna buy before the end of the year, or sell, or wholesale?
Well, hopefully a flip.
Hopefully a flip?
We're working on locating one right now, so
Awesome.
that's the plan.
Cool.
But right now we're working on a short sale that's taking forever, so I don't know what's gonna happen with that one.
If you get tired of waiting for the short sale, let me know. I'll take it over.
All right, sounds good.
And now Dolores, uh-oh, here we go. I know she's still on. Dolores, you there, D? Where's my chocolate girl? Okay, she's just hanging out. Marlene. Oh, there she is. Dolores.
I am here. I'm just listening, guys.
D, I'm gonna
What do
miss
you-
your cookies this year. I'm not gonna be at the picnic. Leon was talking about me. He's gonna yell at me because I'm not gonna be at the picnic, so I'm gonna be camping.
Very, very, very good. You tell me what you want and I'll bring it.
All right.
Dang. Wow. How about molasses cookies? You make molasses cookies?
That's fine. But you might not be here.
Well, you said you'd bring them. You just bring them to Virginia. I got a place for you to stay.
Business trip.
So-
I hear business trip.
Yeah. So Dolores, we still being a realtor?
Yep.
What's the biggest thing you're selling or one of your buyers is buying in the next
None of
month?
my buyers are buying anything. My buyers don't qualify for what's out there on the market. I got 12 buyers. And every time we put an offer, it goes way overpriced and they just back out.
Mhm.
It's tough to bridge that gap between what the appraisal is going to come back at and what they can get
Said
bank
that right.
financed.
And what I'm finding out is that once the appraisal come in with the contract and the buyer doesn't want to pay the difference between the appraisal and the cost of the house, they're out. I mean, we put that clause in that. So the next person gets a deal, but they're going way overpriced.
Yeah, it's
Way
happening
over.
all over the country. All
Yeah.
over the country, people are running into that because they get pie in the sky and then they put an offer in and the bank's like, yeah, no, there are rules.
Oh yeah, the guy
Got a
down the
good
street sold a mobile. He's got it's a home, but it's like a mobile home, like a trailer, but he's got it hooked up to the house. And when I was talking to him, he said he wanted to sell. He only wanted 20,000. Nice 3-bedroom, single. It's got a 2-car garage, and he went. So I told him, I said if he wanted to sell it, let me know. He got an offer off the books without a real estate agent for $60,000 for the house, cash.
Where is this?
It's
Where
okay,
is
but So the guy was in his 80s. So he just took the money and he's down south.
Yeah, but where is this property? I mean, where's the
Oh,
trail?
it's in the it was in the 09 area.
It's in the city, a trailer?
Yep. It's been there for
God
years.
bless
It's
them, I
not,
guess.
it's not nothing new. The trailer home is nothing new.
All right. Yeah,
But that's what it is. I mean, I'm seeing people coming in with cash, just paying off people, and they're taking the money and run. A lot of them want to get out of New York State.
A trailer in the city of Rochester.
Uh-huh.
Am I missing some? I mean, maybe I'm the only person.
I've never, who knows? Yeah.
It's like a double mobile home. It's not like you don't look, when you look at it, you might not even know it's a trailer. It's like a double. It's a mobile home.
I don't know. I got, you know, hey, I learned something new every day.
You live in Rochester, you'll learn something new every day.
Yeah. What do I know?
Yeah, Joe, you got to come to the jungle, man. When's the last time you were in the city, Joe McGuire, looking at properties or something like that? You
Oh God, I
little
don't
suburb
know.
boy.
I don't know. Years ago, I don't know.
Yeah, that's what I'm thinking. And I'll vouch for Dolores's cookies. Her cookies
are great. They're great.
They're amazing.
Awesome.
Mhm.
They're amazing. Leon touts his ribs. Dolores could tout her cookies easily as much. Her cookies are awesome.
I have to agree with you.
It's worth
Why,
coming to
thank
the
you, guys.
picnic just for Dolores's cookies. Even if you don't eat Leon's ribs, if you eat one of Dolores's cookies, you'll be like, that made the whole trip worth it.
That was what happened to me last time. I came late and I didn't get any ribs because they were already gone, but I got Dolores's cookies.
There you go.
Well, I was thinking about a peach cobbler.
These peach
This is
cobblers,
making me hungry.
yeah.
Well, we got-
These desserts are great. Forget, these desserts are it.
Well, this will be the first time she's got dessert competition because Paul is going to be there with his milkshake machine. So
Yeah, he doesn't have a chance.
That'll work.
Get the cookies.
All right, Marlene. Marlene, you're next. What are we closing on? Got anything cooking?
I don't have anything lined up yet. Looking for something to flip, but I possibly have one long-time rental that I might be putting on the market within the next couple of months.
Is it available now or no?
No, I have a tenant in there.
Got tenant in there? Okay.
Mhm.
I hope the market stays just as hot for you when that tenant moves out, for sure.
Thank you. I hope so too.
And we'll say the best fast, Susan Holman. What do you got going on? We haven't heard much from you. What are you up to? Come on, Susan. I hope she's still
I'm
on.
here. Yeah. Nothing's going on. We're planning on selling our rental properties. We're winding things down, trying to tie up loose ends so that we can not have to think about it anymore.
So you're gonna be selling your rentals then?
Yeah.
There you go, everybody. If you're still on this call, there's gonna be some rentals coming up, and those are well-kept rentals, and they're well managed too. I know the property manager, if it's still the same guy, right, Susan?
Absolutely.
Those are turnkey properties. They'll finance for what they're selling them for. Property manager's already in place. They're turnkey. They're ready to go. So if you're
There
looking
you
for
go.
a turnkey property, there you go. So how's your neighbor?
Oh, it actually just had a new little baby.
Oh, okay.
That's the guy with the tree?
Yeah, but there's a young couple in there. And they had a baby just 2 weeks ago.
God love
And
them.
so they're yeah, they're quiet. They get family over for using that beautiful yard. They've made some great outside improvements with a driveway. There's an actual driveway in there, Scott.
Nice, nice. Is the basement Is that, I take it that issue is taken care of, right? I talked to the guy who bought it and he said that like the sump pump was just kind of like cycling the water through. Wasn't going out far enough and all that. I think was
I
the
have
case, if you remember that.
Yeah, I have no clue, but that yard is a swimming pool in the summer and an ice rink in the
Yeah.
winter.
Is it really? It's the one
Yeah.
right next to you, really?
Yeah.
You don't have that
Waterfront.
problem, do you?
It's waterfront property.
Yeah.
Yeah. No, you don't have that, do you, Susan?
Well, it gets squishy enough so that Doug can't mow the lawn for a couple of weeks in the spring.
Really?
We have a very high water table.
You do. Yeah, it's weird.
Okay. Well,
Yeah. I'm sure he hates the fact he can't mow the yard. Then he just has to go golfing, so it's such a sacrifice.
Believe it or not, he enjoys doing the lawn, and it bothers him if it's starting to look bad and he can't do anything about it.
Susan, can I give Doug my address?
No. We hang on to our handyman,
That's right. Yeah. We don't
loan
share
them
our
out.
handyman.
But I'll let him know, Joe, that you're interested in his services. Yeah.
All right, everybody. Well, I'm going to sign off myself. So hope everybody has a great weekend and we'll catch you all soon.
Great.
On your way out though, Susan, I did you a favor last night.
Thank you.
I considered calling you about 3 o'clock in the morning.
Oh my God.
I was up all night, but I was on guard duty, but I said, no, I will not, because I know Susan gets up at night and I was going, if you're up and you're bored, let's talk. I'm stuck here.
Oh, geez. Well, next time, go ahead and call. If I'm up, I will definitely talk to you.
No, I thought I would save you.
I'm up about every 2 hours, starting at, well, I go to bed around 10. So every 2 hours after that, I'm usually up.
Don't tell me that. Now I feel bad I didn't call.
Oh, good grief.
All right. I'll see
All
you.
right,
Awesome.
everybody.
Thanks, everybody.
Signing off.
Have a good night.
Goodbye.
Have a good night.
Bye,
You guys have a
guys.
great
Thanks
night.
for-
Thanks.